On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raidenero, and we are back at it again with another episode of Bag Talk. We're gonna have some bag talk. And today, obviously, you've looked at the title, and we're going to jump right into it. But before we do that, I want to make sure you guys hit the like button on the way in. Free support for the channel, or even the dislike button if you hate what I got to say, because this one might be a little bit divisive. And don't forget to subscribe. If you haven't already, if you've been here more than twice, you definitely should be subscribed because you're already watching the videos anyways. It'd be more efficient for you to just be able to get them and get the notification when they drop. The next thing, don't forget to share the video. Also, the last rung of support, especially if you're already subscribed, last thing you can do, share the video, get me out in the algorithm. Obviously, we got plenty of room in the wolf pack. We're seeing some growth around here. We're up to 391 subs. Kind of bouncing around, so definitely tap in for those of you who are, of the same mindset. Kind of a little bit capable of pivoting is very important. I'm not one of those content creators that just bangs the drum on doing one thing. I'm not in that position. I feel like that's something that you can do when you're privileged enough to be able to just do one thing, which in all honesty, from what I've seen in the real world, it's never just a one thing. It's different tools for the job. So that's the way that I look at finance. And this is my way of documenting that journey. So today we are going to talk about why I am pivoting away from monthly high yields to weekly high yield funds. And it's honestly, having ridden the msty train for over a year, I've seen the night and day difference from when they changed the strategy on Ulti, because I also was a Ulti holder before the catastrophic NAV erosion failure. And then seeing what they've done as a current Ulti holder, it's a base layer for me, for my current portfolios. Now, we will be de-risking them as we go on, but as it sits right now, Ulti is one of my, actually, I would say across the portfolios, it's becoming one of my primary holdings, and it will be a primary holding probably moving forward, for sure. In the lifestyle portfolio, it is the primary holding. In the cover my utilities, the cut to the quick portfolio, it is currently not my primary holding, but it's working its way there. And the reason being is I've seen the shift from a monthly strategy to a weekly strategy. And I'm looking at the way that my roundhill strategies perform. And it's such a night and day difference. It's such a night and day difference. Now, the monthlies can work, and in the environment where they do work is where the market is on a sustained uptrend, where there's always going to be dips. There's no straight up line up to the right. But these sustained dips, these sustained weeks on weeks of we're having a run up towards the end of the week, and then it's dropping hard again. The monthlies can't handle it, and here's why. Especially when they're running a pure covered call strategy, the issue that they run into is they're locked into those calls. And this is just my perspective. I'm not a professional at this. This is not financial advice. This is what I'm doing with my money, and what I'm seeing in my time in the last 12 months being in position with msty. Actually, over the last 12 months. And it's that they're locked into those calls for the entire month. They can't reposition. So my comparison that I have is MSTW. And I've had people, when I bring this up, because Roundhill released a weekly covered call on MicroStrategy finally. And I I'm looking at how it's performing, and I'm like, they're like, people will be like, oh, well, did you see the last payout? Because we've come off of a last week. At the time I was having a conversation, I was like, yeah, they had a bad week. Misty's going to have a bad month. And then we got and as I'm doing this recording, we're getting our distribution because I'm ahead on my content creation. So over the month of September, this is going to land at the end of the month. Yeah, this will be at the end of the month. So over this month, I will have not completely divested because Misty did hang on and give me over $1, but it's getting substantially downsized. Like I'm probably going down to 500 shares. Like there's just no, because I can just park all of that excess in Ulti and MSTW and make more money. Because MSTW has a bad week. If they have a bad week, they can reposition calls. They can re-strategize the next week. And then they can have a good week in the midst of a bad month, or a few bad weeks in the midst of a bad month. And specifically during August, Misty paid out $1. I want to pull this up right now. MSTW distribution. Boom. Here. The MSTR weekly pay. Let's take a look at it here. Top holdings, distributions. Bloop, bloop. Okay. So let's see here. Okay. So sorry about that. Had a sneeze locked up in there. So if we look over the month of August, let me get my little coagulation device out here. Oops, pull that up. And I'm going to go ahead and put this on the screen so that we can all look at it together, because I'm not trying to hide anything. I'm just looking at numbers and, having some ideas. So I'm going to micro machine myself, and we can have this discussion with proper context, because I'm just looking at the math here. So for the month of August, Misty paid 108 for the entire month. The entire month of August. Actually, no, Misty paid twice. So it was we're gonna do full breakdown on this, because you know what? If I'm wrong, I'll eat my words here live on this video. Misty distribute. Boom. Okay, let's go here because yieldmax will have it for us as well. Payable date. Okay, so on the first, we got paid 118, and then I still need to pull up this calculator so we can do the quick maths. 1.18 plus 1.08. So for the month of August, we are sitting at $2.26 total. So let's look and see what this looks like. So Misty had 226. That's total. Now, MSTR or MSTW, which is the chart that we're looking at right now, because we got paid 118 right at the beginning of the month. So this was a two payer for Misty. This is supposed to be a big blowout month. I was excited about it. I was, I'm like, hey, stuff's not looking too great, but like we're riding it out through August. And I did keep that promise to myself, because I was like, I want that double pay. I want to experience it. I've been in this position for a year. I want the double pay. I want that big pay. So we are at 226 for our double pay. We got paid 118 at the beginning of the month and 108 at the end of the month. The distribution is going downward. Now, mind you, we are in a season based on the data for the markets, period. This is a down market time. This month in September, stuff calms down, and I understand that. But these are two products with two different strategies on the exact same underlying. And let's take a look at it. What did we... Oh, you know what else we would have for a good comparison? I wonder what IMST paid. I go up here. Let's see. Or do they have their distributions listed? Three months. Okay. Oof. You know what? IMST is beating Misty. IMST paid $3.48. Now they're on a monthly too. And guess what? They're a company that's actually a crypto native company. So this is going to be interesting on what I should do, because I'm looking at this and I'm like, yo, like these distributions, like now June, I'd have to go back and look and see what Misty paid for July, because that paid July 1st. But IMST has a payment coming up on the 26th, or they just paid. Yeah, they just paid. So IMST, not looking too bad. Their 1 month NAV, they're down 2.4%. 2.5% down for the 1 month. 3 month, they're up 3.9%. And since inception, the cumulative is 20.23%. Those are good numbers. New fund, but they've only been out. They've got 4 distributions recorded on IMST. But this month, during a bad month, I think they're hitting their stride, because they did 348. Misty did $2.26. Now we're going to see what the weekly strategy does, because now we've got 2 monthlies. We're going to throw 1 weekly at it and see what that's looking like. So we're going to do 2. We got the 2 monthlies and the 1 weekly, just to give an example here. So I've got MSTR or MSTW pulled up, and we're going to look and see where they're at so far, because we still have. Oh no, they paid today. So I got it. Their MSTW paid today also. So we do have all of August locked in. Let's see how they did. So we had to actually close that calculator. No, I didn't. Okay. So we're going to do this backwards, because the payment that they just had, 40 cents. Did you see MSTW's last payment? Oh yeah, they had a decent week, an okay week, a good week, and a bad week. Let's see what this came out as. So we got 40. And we're not answering that because we're recording. 1.39 plus 0.78 plus 85. Oh, oops. There you have it, folks. MSTW paid $3.42 for the month of August. That's $3.42. So minus what Misty paid, because I know I've got a lot of Misty fans. I like Misty too. It was my first ETF, my high yield. It's what got me into high yield. But the strategy, and they came in just under IMST. So IMST, their strategy beat Misty by $1. So IMST it beat Misty by $1 and 20 or $1.26 per share. MSTW beat it by $1.16 per share. Like, this is just math. $1.20 plus 6. $1.22. I stand corrected. $1.22. IMST beat Misty by $1.22. MSTW beat Misty by $1.16. Now, if you've got about 1,000 shares, I had going into this month 2,000 shares of Misty. That's a good chunk of change. I could use an extra grand. Like, that is a better deal. IMST, if you're going to sit on a monthly, seems to, at least this month, they completely destroyed Misty. Like, this is just math. And this was a bad month. That's the thing that I keep wanting to reiterate. This was a bad month. August was not good to Misty. The Bears are having their way with MSTR right now. And IMST got out of distribution way better than what Misty did. Now, as far as the base layer of my portfolio, best believe I am 100% dialed in on Ulti. That is my. Let's actually take a look and see what Ulti paid this month. Because now that we're running down the rabbit hole, we're going to go all the way down it. Because this is interesting to me, because this is the stuff that people who run into high yield need to actually wrap their heads around. So, 14.7. How do they only have two distributions on here for August? They have August 6th. That makes sense. August 13th. That makes sense. Where is August 20th? I'm pretty sure actually, I know we got 10 cents last week. So, I mean, obviously, different price point, but we have 10, 20, 30, 39 cents. And, that's a stable, and the distribution rate's about 90% right now. Like, these are the things that we have to look at, and that's also weekly. And they've been relatively consistent. I mean, I'm factoring my stuff for around 8 cents is what I'm doing my amounts on. But if we're playing the game right now, like, Misty has been taking a beating. The weeklies, they get to reschedule. They have an advantage. So if you have a bad week and you're locked into some bad calls, you're locked into bad calls for a week. And you get to re-strategize. Now, distribution history. I wonder. So we're gonna do a little experiment. Let's see what they did for. Oh, okay. So we can't go back further on that one. But I do want to add another one into the mix. MSI distribution. I want to take a look at RecShare MSII because I'm deciding between them and MSTW. So I want to see what their distributions look like. Where's the distributions? Oh, see, I don't like this, RecShares. I don't like it. Because you guys have been out for a little bit. See, the MSII distribution rate is 19.44%. I don't like that. Uncapped potential upside, half weekly income via cover or straw strategy, balanced growth and income. Where are their distributions? See, I don't like it when a website doesn't give me the distributions. Like, you should have that. Everybody else has it. Dividend history. You got to go look up the dividend history. Let's see here. Let's see how MSII did. I'm interested. We got our eye on you now. Like, now we're crunching numbers for income. Like, this is what you got to do. Let me share this tab. We'll jump over here. This is RecShares, MSTR growth and income, MSII. So this does half and half. It's part growth, part income. I don't know that this is going to be a good contender for the month of August because their payments. So I can already tell that they're going to be, they might have, I don't even think they hit $2.26. They did not hit $2.26. which is what Misty had, and I'm not going to go into one. So they're in last place, but we are looking at growth and income. So let's go back here and see what type of numbers they've been putting up. So they have a 20% income rate. The NAV change, they're up 2%. Which actually, I mean, considering that MicroStrategy has been getting beat on, them being in the positive 2% is probably a good thing. But this doesn't specifically work for me specifically because it is out of my income range. So this would not be something that I would want. So they're beating the S&P 500 since inception. That's kind of cool. But this doesn't work in my portfolio because I'm looking at the income as opposed to the growth. Now, I don't like to see the NAV decline, and I'm not a fan of buying high yield. And that's actively NAV eroding. And by NAV erosion, I will define that in my terms, which is what I consider the definition of NAV erosion. That is the distribution causing the NAV, the net asset value of the position, to constantly go down, which means when you get paid, you do not recover the distribution ever, and you erode to a level that's below the inception price. And it keeps eroding, which means that, like, hey, not the market went down, therefore all these positions went down, therefore the ETF went down, and then people get on Reddit or get on Blossom and go, "Oh, NAV erosion." No, that's called the market's down. If your S&P 500 VOO is down, and then you're talking about some individual one-off stock that's in a highly volatile market that has higher IV than what your boomer holding has, that is not NAV erosion. The market is down. The underlying asset went down. Therefore, the ETF that tracks that underlying assets that's running covered call strategies also goes down. Them's the rules. That's how the game works. It's the reason I always say, whenever the market's red, I check three things. I check the S&P 500, the NASDAQ, and then the Russell. If everything's down, and actually four things, and I'll go look at Bitcoin. If everything's down, everything is down. It's not NAV erosion if the market's down and therefore your position is down. Now, if you keep getting paid and the NAV keeps whittling down, we've seen that before with the old monthly paying Ulti. Never came back. Every payment went down, whatever. Like, I mean, the current running of Ulti, and I understand that, like, people love to hate on what they don't understand. And I'm not even coming at this from a position like this matters to me. This is like maybe a quarter of my portfolio. And I take a good chunk of my distributions and buy Bitcoin. So, like, I'm beating you on all levels. You want to talk growth? Do you have a CAGR that's over 50%? Because I do. Do you hold Bitcoin? Do you hold a whole one? Are you over one? We got two different things going on here. It's a different conversation. This is a tool to replace my W-2 income. I'm not expecting it to grow. If I need growth, guess what I buy? Bitcoin. It grows better than everything. Guess what I secondarily buy? MicroStrategy. Why? Because it grows better than everything. And I don't have to worry about selling my Bitcoin. So I have 3 layers deep, and you're talking about the surface layer of my portfolio with your opinions that are just horribly wrong, considering the growth on most of your portfolios is not beating the hurdle rate of just buying Bitcoin or just buying MicroStrategy. But, you know, people don't like math. This is just math. But this is my thought process when I'm looking at how I want to do some growth. Now, the MSII might be good for something that's a little bit, when I get to my, I guess I would say, a longer term portfolio, to have some income in there, because this MSII is not a good payer. It's not. So it's not going to be used for that. But, like, as far as catching the growth and a little bit of income, it could be good for that. But these are the distributions for Which one is this? For Misty. And this shows the first one that we got at 118. The next one they've already announced it's going to be 108. That's $2.26 or yeah, $2.26. And that's I was going to keep 500 shares, but after looking at the numbers, honestly, MSTW is probably going to be what I'm rolling this to. I'm going to roll it during the dip. The issue with MSTW and the way that I work these positions is the way that I work these positions is with the roundhill ones, because they do have leverage, is every jump of 30% I got to sell off, which means I'm going to have to jockey this with my ulti, because what I'll do is if this jumps 30% on my nav after I get into it at 30%, I'm going to shave a little bit of that off and I'll put it into ulti or start another position within this ecosystem, because I do like the weeklies. I like the ability for them to reevaluate and reposition on a weekly basis. I do like that, because as you can see, it's not every. Did you see the last distribution for MSTW? Yeah. Did you see the rest of the month? Because it did better than Misty overall. The rest of the month, because they had the ability. Oh, I think I missed a week, because this is just, yeah, boy. Let me re-add this. I might Yeah, I might have missed this. Hold up a second. Let's get that calculator back out. I might have even left. I don't know. And the fact that I don't know is my fault, not anybody else's fault. But I want to make sure that we get. Okay, so 0.85. I'm pretty sure I got all of them. 0.78. Oh, plus. Yep, 342. Okay, yeah. No, so I got that right. Like MSTW crushed Misty for this month. And there's just really not, obviously it's not what would I say? Not in the sense of it's a newer fund, so people are like, well, it's a newer fund, and it's like, well, it's weekly. They have the ability to re-up. And that's that. I'm going to keep saying that. Like, they just have the ability to not be locked into bad calls all month. Because if we only got one payment this month, it would have been $1.18 versus this. Let me pull this back over for you. Like, they're that's irrefutable. Like, Roundhill didn't have a knock out the park month. The end of the month, they fell on their face for that week. They had a bad week. And the rest of the weeks were meh, and then one hardcore good one. And even if they wouldn't, they beat Misty by so much, they could have had 2 bad weeks this month and still came out ahead. If they had 2 40-cent payouts, they still would have been ahead of Misty. If they would have had, let's go scorched earth. What if every week was the worst week? Okay, scorched earth. If every week was bad, if they flubbed every single week, okay, they wouldn't have beat Misty. But what if they flubbed 3 of the 4 weeks and had the worst week? So 3 weeks plus their best week. Actually, let's go 3. You know what? Well, let's go 3 weeks plus the 85-cent week, which was the first week of the month, which was an okay week. They wouldn't have beat Misty. But 3 bad weeks plus their best week? 3 weeks plus their best week, they would have beat Misty by 23 cent or 28. Hold on. It's the end of the day. I can't even do math right now. They would have beat Misty by 33 cents if they would have had 3 of their worst weeks paired with their best week. So, you know, if they only hit 1 good week and have 3 bad weeks, like, they're gonna beat Misty. And I think this is gonna be I'm gonna be that guy. I'm going to the dark side in regards to the MSTR plays. I'm going to the dark side on it. I'm dumping all of my Misty. I'm going to dump all of it after we get paid. Every last share. And I'm going to finish out my ulti position, which will put me at about 3,000 shares, which is what I factored I would need to make what I need to make at about would make what I need to make at what is it? It'll put me at 3,000 shares. It'll make what I need it to make in order for me to have 250 coming in, because I want to get $1,000 out of my ulti position based on us getting 8 cents a share. And if we're not getting 8 cents a share, then I'm going to have overflow, which is going to be awesome. And I think I'm going to start saving that overflow and buying more MSTW. We're going to get positioned heavy on MSTW during this dip. And then I got to figure out what else I want in there. Because again, once we start running, which I do believe we'll start running, I am long MSTR. Like, that is not a game. I'm ultra bullish on Bitcoin. I'm irresponsibly long Bitcoin. I'm irresponsibly exposed to Bitcoin. It is going to be the future, but I have to fix this income problem. And, you know, right now, we've made some accomplishments. I am projecting that we'll be at parity with my salary next year, which will be perfect. That's an alignment for my 24 months, almost 20. Well, as of this recording, we'll be going almost into 22 months in alignment with when I get to make a decision on if I'm going to continue working, or if I want to retire, or if I want to get a different job, or if I want to stay at home, or if I want to start something on my own. I will have bought all my time back. I will be out of the matrix. I'll be officially able to get out. And that's including continuing to invest and manage my portfolio. That is my career at this point. The W-2 quickly becoming the side hustle. But these are the conversations. These are the things that you have to look at. You have to check your investments, especially if stuff starts going south. It's not that I don't want to be positioned in something that's tied to MSTR. I get dips. I understand dips. For those of you who've been around here for a while, you've seen me with all kinds of red. I don't care as long as the end goal is being met, and I want to meet it efficiently. And if we can go through these dips and I can still produce income off of my positions, then I would much rather do that. Like, and then, you know, accumulate these with leverage during the dips, and then as they go up, cycle them into other things. Which honestly, it's probably going to just end up sitting in Misty, or I might have to start a de-risking position of some sort and throw the money over into there, and then just sell back into it when it's time to, when MSTR dips again. But right now, I think we're riding a dip. I think we're going to be riding a dip for the next couple of months. So I'm pretty sure I'm going to have a few months of just buying MSTW and being able to get shares accumulated that way. I've got my maintenance money that I'll be throwing in every month. And yeah, we'll be doing that. So that's gonna, I'm actually really excited about this. I'm also really excited to get this payment so we can start, you know, hacking and slashing. The reallocation is going to be real. It's going to be interesting. Going to be some big realized losses that's gonna on the income portfolio, but I am going to start making that shift. I'll probably dollar cost average, and I'm not going to do lump sum because that would just be insane. But they're going to be big. They're going to be big chunks. Like we'll probably do exactly what we did to get in the position that we're in now with Ulti, which is selling off 150 share lots to kind of start that cycle going and making that transition over. I mean, it might be 200 shares because I can do 100 of the shares going into Ulti to bolster that position and 100 shares going into MSTW to get that started, and then just put MSTW on drip while I'm waiting to finalize those moves. That's going to be interesting. Yeah, and we'll get it done by over the course of the month. By the time this video shows, that transition will be done, and we'll be talking about it on the portfolio updates of exactly what happened, and I'll do the breakdown on it, and it'll be great. So you guys need to stick around and make sure to tap in for that because it's going to be interesting. I really don't have much else to say about this. It's just my take on it, and from everything that I've seen and personally experienced being in these high yield funds, one of the things I don't like doing is hopping in and out of stuff fast. I like to at least be in a quarter. I'm a very slow investor, but also I have to manage my income portfolio, and like there's certain metrics that need to be met because I need a certain amount of money coming in. Because like if you're ever going to transition to living off this, like you kind of have to have some control. The other thing that I'm not is beholden to any specific thing outside of Bitcoin. And I mean, that's still math based. For me, it's just the math on that in the last almost 13 years that I've been involved with it has never changed. So it's only gotten better and more ridiculous and more Google numbers. So I don't really have to worry about that. And like when I don't know what to do with my money, that's where I go. I just go throw it in some Bitcoin. I'm like, I'm not going to be messing with it for a little bit. I'd rather have it sit over there. And then when I'm ready to use it, it buys more stuff because everything's going down in value against Bitcoin. But as far as the income goes, that is something that you have to semi-actively manage it. Now, I really only start making big moves if something goes catastrophically wrong, but coming from the cryptocurrency space, I know what happens when things start going catastrophically wrong and you sit there and you watch it for too long. And I'm not saying that msty is something that's going catastrophically wrong, but what it is doing is it's pulling me out of my income range that I need to be for my portfolios, for me personally. And the thing that made me notice this is I have two different portfolios that run two different strategies. They have a similar base, which is Ulti. But my Robinhood portfolio is themed differently so that the portfolios aren't moving completely in tandem because we're doing all the Robinhood stuff. I also have the Moonshot stuff over in that portfolio. Like that's the fun one, but it started outperforming my msty portfolio. Does it mean that that's going to happen indefinitely? We don't know. I don't know. Probably not. But the fact that they're not 100% aligned, where I can have days where my primary income portfolio is in the red and that portfolio is just glowing green and doing well. And, you know, I'm looking at my income percentage because I track that over in Snowball Analytics as well. And I'm noticing my income percentage on that portfolio is way higher than my cryptocurrency based portfolio. And I'm like, hey, I don't like that. I don't like it. So we're going to be making some adjustments. I've got MSTW is going to be the play for me for my micro strategy for that side of the portfolio. And yeah, we're gonna go ahead and get Ulti fully positioned. We'll put all the rest of the msty shares. We're gonna convert them over into MSTW, and then we're gonna see how that runs for a quarter and see what it does. I've already got my third pick for that portfolio picked out. So when it's time to start shifting over into another position, I've already got that going too. Got my thoughts and my play on that. But my primary income is a very crypto focused portfolio, so that's what we're doing over there, and I'm willing to ride those waves, but I want to do it efficiently. So we're going to keep MicroStrategy a big part of that. We're going to go ahead and switch that over to MSTW, so that way we're not locked in for the month. And that's what I think, that's where I'm going with it. That's what we're going to be doing. So you'll be hearing about this after those moves have already been started, probably completed, because this is going to be at the end of the month. I'm hoping that you guys spent your September fortifying the bag. We're going into fall. The seasons are changing. People are back in school. You got that little bit of extra time to start doing some research, and hopefully this rambling, this ranting, you guys are understanding the thought process and the thought that actually goes into, and the work that actually goes into this high yield style of investing. Now, this is specific. There's specific portfolios. When I do the portfolio breakdown, there's 4 portfolios there that I am actively managing and finagling with that you get to look at. And there's a reason that that is set up that way, because you don't have to just do one thing. And I like to be focused. I like to have my portfolio allocations like very focused for a thing that they do, and then the things start overlapping and they touch each other, because you see me transferring money from the income portfolio when those distributions come in. We're tapping the margin a little bit early to get it shot over into the other portfolios to get the money dispersed where it needs to. It's not all just going towards debt, but the lion's share of it is. We're moving debt over in there. There's constantly a balance. So my portfolio, actually, when I show it, like when I showed it at the beginning of the month, had a negative balance sitting in the income portfolio of about $5,000. It's around in there. That's just getting gargled up by the distributions as they come in. And one of the other things that I like about it is, when you're going distributions and moving it to weekly versus monthly, it's eating at that, which means I'm paying less in interest, which I should have. If I haven't yet, you guys can verify down in the comments. I should have called and negotiated down my interest rate over at Charles Schwab. And I'm going to probably do a video on that as well, because you don't get what you don't ask for. And there are certain things that like you got to call and put in the legwork and do the work. And interest is one of those things. So I'll probably be doing a video on negotiating down your margin interest rate and tracking how that went. That's going on the beginning of my month of September to-do list, so you guys can follow up with me to see if I did it. And so we're going to leave it at that. We'll be back next week with another Bag Talk episode. This has been another great episode. Don't forget to like, share, and subscribe. We got plenty of room over here in the Wolf Pack. We don't bite much unless requested. And it's a good group of knowledgeable people. Tap in down in the comments. I do check and answer comments when they're down there, questions, all that stuff. And by the time this is shown, there should be contact information in the description as far as email for collaboration, interviews, questions, stuff you want me to do episodes about, all of that stuff. We're building the plane as we're flying it. It's a one-man show over here. I'm not necessarily trying to be an influencer, but since I'm doing these videos every week, multiples, and then at the beginning of the month, a bunch of them, I figure, adding the most value I can, because the people who I'm making these videos for aren't asking me questions, but you guys can, and I'll answer them. So, till next week, people, it's your boy Reckless Rated Arrow, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.